Peter Rose, Longwood Currency Trading. It's a beautiful early April 2021 day, and I wanted to talk with you about the metrics of emotion, the win-loss ratio. But before I get into that, I have something I want to show you. So the other day I was out here and listening to the birds, which you can hear the birds. But today I wanted to share with you the metrics of spring in New England. And there it is. So that is new growth in the spring. That's a metric that spring is here, that we're probably not going to get another snowstorm, that we're probably going to see the buds on the trees starting to come and other flowers starting to flourish. And the more the flowers bloom, the more confident that we can have that spring is really, it's really here. It's really taking hold. And that makes us happy, I suppose. I'm happy that the spring is here. And every day that you can get up and come outside and you don't have to wear a stocking cap, big heavy parka, the better it is, and the more you're convinced that spring is here. You know, just a few days ago, well, April 1st, which was 7 or 8 days ago, 6 days ago, we had, where it's green here, we had a light dusting of snow. And so even though it was April in New England, and you had some grass that was starting to poke through, because you got that little hit of snow, it wasn't really confirmed that spring was here. Birds were out and everything was going, but then you get a little bit of snow, and then in the evenings it was down in the upper 30s. It was pretty chilly. It would warm up into the 40s during the day. But now it's been progressively a little bit warmer. We've got some flowers that are coming out, and so not only are we more and more convinced or about spring coming, but we have an expectation that when we get up tomorrow morning, it's not going to be to a snowstorm, but it's going to be to a fairly nice day. Now, it might not be 60 degrees like it's supposed to be today, but it'll be 55 or 50, and maybe one of these days, a week or so from now, it'll get up into the mid-60s, and it'll progressively go on. So our expectation that we're going to see a 30-degree day or snow on the ground or an ice storm becomes less and less. And that metric maybe will smooth out the joy or the excitement that we have for first seeing the flowers coming up, or saying, oh my gosh, we got green grass out here, instead of just about 3 weeks ago we had 4 inches of snow out there on that lawn. And so when we're looking at our trading, the metric of emotion is our win-loss ratio, and I'm going to explain that because I think it's so important that you understand that trading just isn't rules. And I don't mean to get philosophical and all this stuff. Don't be turning the thing off because I'm going to be talking about our emotional and personality structures and how important they are to our trading, because that's what makes the trading fun. If all you did was have mechanical rules, you pushed a button and the thing trade, you get a robot. You're not trading. You're abdicating your joy and the responsibility for your life on a robot, or give your money to some investor and let them trade it and lose it for you. It's much more fun to lose it for yourself, because then you have no one else to blame but yourself, and then you can have a choice to either make your life better or make it more miserable. It's as simple as that. And so the difference between a good trader and a bad trader is going to be somebody who is interested in understanding their personality and their emotions and matching them to their trading. And all of that is a component of the metrics that you develop about your trading. These are the metrics of emotion. The emotion, we know what that is. The metrics that we're going to talk about is win-loss ratio. And why? Because it's from your win-loss ratio that you develop your positive expectation. And as several videos ago, I did one on positive expectation. And I've done videos since on visualization and other aspects of this expectation model. And that's exactly what I'm going to be discussing today, is the ability to develop a positive expectation of your trading based on the metrics that you have out of your win-loss ratio, the consistency of your trading. You know, you might say, well, I don't need all that philosophical stuff because I either win or I lose. That's what Lee Chevelle said, one of the original turtle traders. You know, at the end of the day, you either made money or you lost money. Well, that's pretty dry. Why would you trade for that? You trade because you enjoy it. You want to enjoy it. The trouble is that when we win, we tend to get all cranked up and all excited. And you have a series of wins, and you think you're master of the universe. All of a sudden, you take one bad hit, and you go into a depressive state, and you think you're a complete idiot. That's not having control of your emotions. Now you would say, oh geez, if I flatline my emotions on my trading, where I behave and act the same with a winner as when I have a loser, then that's pretty dry. I wouldn't want to do that. No, you'd want to do that because it's those highs and lows that can adversely affect your trading. Even a series of wins makes you think you're invincible, and that's just going to make you do stupid shit. It really is. And if you go into a series of losses, you're going to be depressed and you're going to do stupid shit. So you have to have some way to manage those highs and lows so that you have a level playing field. And you do that through the win-loss ratio. If you have a large enough sample size of trades or trading days, or however you want to measure your win-to-loss ratio, you either have win-to-loss ratio over transactions, you have win-to-loss ratio over days, whatever you want to do. Your sample size, I think, has to be about 300 trades in order to have some idea of a valid, consistent metric that you're going to be looking at. And if you're just starting out in your trading, I mean, let's say you have 3 months to maybe 8 months or something like that, and you've tracked your trades, you really can't develop any metrics from that, because when you start trading, you don't know what the hell you're doing. So the metrics are going to be all skewed. They're all going to be crazy. The unfortunate catch-22 on this stuff is that you need about 300 trades in order to develop a reasonable set of metrics. And I'm saying that because the first 100 doesn't count. Even if you're a good trader, it's not going to count, because how do you know what you've been doing is consistent with good or bad? If you don't have a handle, a positive expectation, or even if it turns out to be a negative expectation, you don't know what to work on. You don't know what to manage. And so that's why I call the 300 trade sample size is what you need. Now, as a day trader, you know, that's pretty simple. I mean, as a day trader, I do maybe 1 or 2 trades a day. But if things are really roaring, I could do 10 or 15 trades, 20 trades. I've done as many as 20 trades in a day. I don't do that very often because you get really excited and it kind of wears you out. But you can come to that 300 sample size in a reasonable amount of time. If you're doing long-term trading off the dailies or even the 4-hour, it's going to take you months and months, if not years, in order to develop 300 trades. Because you're not placing, 4 or 5 trades a day, 4 days a week. You might trade twice a week as a long-term trader, or once a week or something. And then if you're doing that, you're probably trading multiple currencies, and that's one of my no-nos. I just think it's crazy to do that. if you are out on the longer term charts as a longer term trader, you're probably more able to do multiple currencies because you're given more time to analyze stuff. You don't have to put the trade on today. You can wait till tomorrow and see how that second or third or fourth currency pair that you're looking to put on is gonna do for you. But you know, as a beginning trader starting out, unless you come to the table with a huge bankroll, which you'll probably lose if you, like I did, if you don't know what you're doing, before you can develop your metrics, then you're going to start your trading with $20,000 or $30,000 maybe, and do you really want to divide your bank up into trading 3 different currency pairs with a $30,000 bank? I mean, I particularly as a beginner, I mean, I just don't think you want to do that. So it's going to be very difficult if you're a long-term trader to develop the statistical metrics that you need in order to have the kind of confidence in your trading that I'm talking about. It's just going to take you more time, that's all. I'm not degrading you if you decide you want to be a long-term trader. I'm just cautioning you that in order to establish your feeling of comfortableness with your trading, it's going to take you longer. And you're going to have to be hyper aware of the fact that from a statistical standpoint, if you're just trading, if you are a long-term trader, you'll eventually run into those 6 losses in a row, and you'll have 6 wins in a row, but the 6 losses are going to affect you more than the 6 wins, believe me. That's going to really hurt you. That's really going to affect you because you're going to think, oh, my methodology is wrong. Well, it's not your methodology is wrong. It's you're in the wrong place at the wrong time. That's all. But you won't know that if you're doing long-term trading unless you've listened to the video and believe that. As a day trader, you could hit those 6 losses 4 or 5 times in 6 months, 4 months, and the 6 winners in a row. So you're just used to that. It's like driving a car. If you're out on a country road, if you live out in the country somewhere and you're driving along, when are you going to hit a stop sign? You're not. So when you do, it's like, holy shit, I got to stop. But if you're driving in the city, every block you hit a stop sign. And so it's no big deal. You stop and then you wait and then you go. Trading is no different than anything else as far as the impact that the activity has on us from a psychological standpoint, and how our personality interacts with the rules that we build for our trading. It's very difficult to build those trading rules if you don't understand what type of trader you are, what type of environment you flourish in, because the rules are all built, like, for example, my hard rule of an 8-pip stop. Everybody looks at that and they say, oh, you're fucking crazy, you don't give your price room to breathe, blah, 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 blah. I don't want my price to breathe. My profit target isn't that far away. I'm happy with 5 pips a day. I'm shooting for 15 or 20 because that's my profit target, but I don't have the expectation on a short-term basis that I'm going to hit those profit targets every day. But I'll bet I could grab 5 pips of that. And so that's great for me. But if you're a long-term trader, that rule doesn't make any sense to you. It has no bearing. A corollary of that rule would be important, but you have to match that with your emotional state and your personality and all that other stuff. The key to the thing is that the metrics enable you to have a balanced view of what your trading is and have an expectation of what your average normal gain will be. I hate to put it as a gain, because the larger the sample size that you have, just like where I'm looking at the flowers, the more flowers that come up, the more the grass turns green, the more the buds on the trees come out, the more I'm convinced that spring is here, and I look forward to that, and I put the Like my wife put out the lawn furniture here the other day. Bang, 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 bang. He had a woodpecker back there, and he thinks he's going to knock down a tree. But all these things build this expectation of spring, and I love it. I'm not running around the yard jumping up and down so that if it does happen to snow tomorrow, and it has snowed this late in April before, I'm not going to become depressed over the snow, because over the longer period of time, my experience has been, spring is here, we're good. And that's not to say I become depressed when winter gets here, because I get excited about the snow. I like the changes of the season. Some people don't. They live in Arizona. Okay. Some people don't like Arizona. They live in Alaska. That's great. I live in New England. We get hit both ways. But I have, because I've lived here a long period of time, I have this expectation of what life will be like. And so one rainy day out of the 365, or 20 rainy days, I mean, that's just part of the experience, because I know overall everything is going to be okay. So if you have a good win-to-loss ratio, then you know, over a large enough sample size, 300 set, then you know that over the long run you'll be okay. So when you hit that 6 loss run in a row, it isn't going to bother you. You're not going to change your methodology and think your methodology is wrong. You just happen to be in a statistical drawdown. That's all. Same thing with the 6 winners in a row. You're not going to get all jumping up and down on your desk. Look, I had a video out, I don't know, a few weeks ago, where I said I had 9 winning days in a row. Not 9 winning trades. I had 9 winning days in a row with a, I averaged, I think, about $500 a day. And that was great. But I wasn't jumping down, oh man, I'm the master of the universe, I got this shit locked down. And I said that on the video on that 9th day. I got this 9th winning day, and I'm probably going to have a couple of bad trades now. So because I'm going to even out, because my metrics that I'm very well familiar with, I know what my win-loss is, I know what my positive expectation is, I'm not going to worry about it. So when I did have that losing day and I lost a couple of $1,000, it didn't bother me. And then I made a little bit back, and then I lost again. And for some reason, I really took that loss hard, because I wasn't, I don't know, I just wasn't tuned into things. And that loss led to another loss that led me to take a position and hold it for until now. And it was thousands and thousands and thousands and thousands of dollars underwater. And I'm just not letting it bother me, because I know that in the long run I'll be okay. I'll come out okay. Not only did I have some losses, which I'm not concerned about, but I made one of my stupid errors where I let a losing trade just run. And you know, you can say you're not going to do that, but you do. You're going to. And so, and I didn't at this particular time, because I was in there fairly actively trading. I didn't have my long-term panic stop in there, which is, you know, when things start to go against you, you say, oh, do I want to get out here? Do I want to do this? If it gets that far out, it just takes you out. And I didn't have that on there. And so the thing just ran to the point where it was so much money that I was behind that I just said, I took a bias to the direction the money was going to go in, and I'm going to hold to my guns. If I can run 200 pips against me. And it's a big position. So, but it came back, and it's, I don't know, 40 pips against me now. So, you know, it'll work out okay. And if it turns around and goes further against me, and I have to cancel the trade out because I can't take the heat, it'll just be a bad beat. And it will probably take a dent in my positive expectation value, but that's my stupid hit. And as long as I can look back over the body of trades that I've done, and I can say, geez, you know, I had an X percent expectation or pip per day pip expectation, average pip expectation, and now it's way below that. And I know why it's way below that, because I did this stupid thing. Then I'm not going to get wound around the axle and despondent about the fact that it didn't work out, that I lost all that money. I'm just going to say I have to be more careful. I can't let that happen again, and I have to put certain protections in place, or I have to look at this differently. And I'll do another video at some point about how you unscramble yourself from letting that type of thing happen. I mean, I've certainly had long periods of time where I haven't had a run or go. It just seems that for me, and here's a metric, about every 3 months I drop my guard and I start thinking, I got this, and then the little bridge troll that sits on my left shoulder here and tells me to do stupid shit. Yeah, he tells me, well, hang on, it'll come back. Peter, it'll come back. Yeah, sure. Fucker doesn't come back, and I'm screwed. And that wrecks my metrics. So that when I get on these videos, I can't say, well, I have a win-to-loss ratio of X, Y, Z, or I've got a number of pips expectation to be X, because it gets all fucked up about every 3 months. But that's okay, because in the end of things, I have enough confidence in myself that I'll end up doing well. Just like I'm looking at those flowers come up down there by the barn, which you can't see the flowers now because they're just starting to come up, that they'll continue to come up, and that even if it does get a little colder at night, they'll survive, they'll be okay, because they know it's time to come up and it's going to be okay. Having the metrics of emotion based on a reasonable sample size matched with your personality is how you develop your trading rules. Please think about what I'm talking about here and try to figure out what metric would make sense to you, what sample size makes sense to you, and do your work. Go back over the body of your trading and do your work, because it's all going to be worth it in the long run, because this trading stuff is so exciting and can be so potentially profitable that look, you wouldn't expect to go to 6 months of trade school and become a brain surgeon. You got to put your time in, and you got to do your studying if the goal is high. And it isn't difficult. The study and the work isn't difficult. It's simple. All you need is a few rules, and you need to know some basic background information to get your trading going. But you got to know the right information. You got to be able to pick out the gems from all the crap that's out there. And you got to be able to look at all the talking heads at you and the people that write the books and stuff, and pick out the stuff that's meaningful, that has something to say that will directly help you. I hope this channel helps you. If not, I'm sorry about that. It's helped me. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day. And go outside if you're in a spring type season, and just take a look at the plants and see if they're coming up for you right now. If they're not, they will be. And if you don't have those kinds of seasons, I'm sorry for you, but you got to do something else in order to appreciate the beauty of the nature around you. Yeah? Okay.